Hi, I'm Linda with Tax TV. I'll discuss the payroll responsibilities of a business owner and explain how to calculate payroll taxes correctly. We're going to review the business owner's federal payroll tax responsibilities and the state payroll tax requirements for a California business. Please keep in mind that some payroll taxes will vary depending on what state you are in. For specific state payroll tax information, please visit our Payroll Tax Center at taxtv.com. Now, let's begin. When we look at payroll, we have two sides of taxes, the ones withheld from the employee and the taxes the employer is responsible for. We'll first review the employee side. Employees pay Social Security, Medicare, federal withholding, state withholding, and state disability taxes in the state of California. The Social Security percentage is 6.2% of the employee's gross pay. However, in 2011, the Job Creation Act of 2010 reduces this rate to 4.2%. This rate may change again in 2012, depending on the action of Congress. Medicare is 1.45%, and state disability for California in 2011 is 1.2%. These are all fixed percentages which are required to be withheld from employees' paychecks. The federal and state tax withholding amounts for the employee vary depending on the employee's marital status and exemption amounts. The federal and state agencies have tax tables to compute what amount of tax is required to be withheld. The normal range of combined state and federal tax withheld from an employee's paycheck is typically between 15 and 23%. Next, we'll review the employer's tax responsibilities. Employers are also responsible for paying Social Security and Medicare tax. In addition, they are responsible for paying federal and state unemployment taxes. The state of California also has employment training tax that is paid together with the unemployment tax. The Social Security percentage for the employer matches the 6.2% that the employee pays. Medicare also matches the employee amount of 1.45%. The federal unemployment tax rate paid by employers in every state in the nation is 0.6%. State unemployment is the only tax that a business owner may have some control over. It will vary depending on the amount of unemployment claims the business has. Each new business in the state of California starts at the rate of 3.4%, but this rate can increase to as high as 6.2% or may be reduced to as low as 1.5%. The employment training tax rate for California in 2011 is 0.1%. When we add all of the employer tax responsibilities together, the total payroll tax responsibility for the employer side is approximately 11.75%. However, this 11.75% tax amount will decrease during the year depending on when the wage-based limits for certain taxes are met. A wage-based limit means an employer is responsible for paying taxes on wages up to a certain amount of gross payroll its employee earns in a calendar year. The tax categories with wage-based limits for employers are Social Security, federal unemployment, state unemployment, and employment training tax in California. Please note there is no limit for Medicare tax, and the Social Security wage-based limit varies each year. In 2011, the Social Security wage-based limit is $106,800. For federal unemployment, the wage-based limit is $7,000. In California, the wage-based limit for employer state unemployment and employment training tax is also $7,000. Also, for employees in California, there are two taxes with wage-based limits, Social Security and state disability. The wage-based limit for Social Security is the same as the employer rate, or $106,800. The wage-based limit for state disability is $93,316. For more information about payroll taxes, please search taxtv.com.